Entschuldigen Sie bitte, nein sprechen Sie Deutsch. So, this is in English. And it's nice to be invited to present to you. I was not watching the slides, and I kind of got the point, how much has changed in 10 years. But I did turn to Matthias and say that in 10 years, our bank's forms are still exactly the same. Even though we have the internet, etc., they still have a lot of documentation that they want us to use, which is not necessarily making it the easiest. Now, I have a presentation here that I need to bring up online, which will be interesting to see how this moves. I think I have to move it across to the other screen. Is that right? Whoa. Hold on. Aha. Let's just see how we do this. I think I do that first. Oh, yes, there we go. And then I have to work out how to do this looking back over my head, as the technology is going to be interesting. Full screen. Okay. And let's just start at the beginning. Okay. I'll start at the beginning, which hopefully will be me. It's me. Thank you. I kind of get up to a lot of stuff. I travel extensively around conferences, networking with financial people, and picking up ideas and news and stories. I was tempted to make a lot of jokes about the Eurozone today, and then I'm thinking better of it. The only one I'll say is that an Irishman, an Italian, and a Greek go into a bar, the German pays. There's much worse than that as well. Suffice to say, it's nice to be in Germany. I come over here probably about 3 or 4 times a year to different conferences, and I always get different views and news. I still talk a lot about Deutsche Bank's Q110 Felixstrasse branch, which was an amazing experiment in Second Life and in high net worth servicing of retail operations, which it kind of went away, but there's still a lot of innovation that came out of that project, which is worth thinking about today. And when we talk about innovation, over the past 10 years, there has been a lot of innovation. What tends to happen with banks is that they think innovation is something that they'll play with, and then when they've played with it, they'll drop it and say, well, we tried that, and it didn't work. And things do work, but innovation for a bank tends to be only something that's important when they're profitable. So until about 2008, it was on the agenda. It went away. It kind of comes back every now and again. Or when someone's done something that's so blindingly obvious that it's going to take their business that they have to respond. And that's when banks follow innovation. They very, very rarely lead innovation, which is why all the examples that Dirk was using, I think, came from outside the industry. Equally, I've been around long enough to know that we make wild predictions about Google or Facebook taking over the banking community. It'll never happen. I can say that categorically. And the reason I say it categorically is that 15 years ago, we were predicting that Microsoft and others would take over the banking industry. It never happened. Tesco, Virgin, it never happened. BMW even, who have a banking license, as do many car manufacturers. It never happened. The reason it never happens is because banking is so dull and full of regulation and compliance and overhead and administration, it's not worth it. So banks exist purely as the plumbing to provide the energy and the electricity of commerce, but no one's interested in commerce and banks per se. They're interested in what you can do with money and value. And it's the point I'll make in this presentation. So banks will always exist because they're necessary, and they have licenses that protect them, and they deal with money, which is important. But what they actually do in terms of banking itself is transforming radically. But banks are not. But they might need to, and I'll explain why, which is why this is themed as banking is needed, but banks aren't. Banks are needed, but purely for providing electricity, plumbing, the movement of transactions. Everything else is being taken away, gradually. You can find everything I do from all that stuff there, but in particular I would recommend the blog, because what I tend to do is talk about people on the blog. I don't name you individually, although I might, depending on what you say to me over coffee. But normally I'll just talk about themes and things that I'm picking up And I share everything that I talk about and hear on the blog. So it's quite a useful reference in English, I'm afraid. So I'm really going to talk about the bank of tomorrow, and what I see happening is we see banking transforming into something different. I just came back from Iceland, where I was talking about banks are now all just personal financial managers. They're replacing branches with personal financial management online. They're replacing online banking with PFM online. There's no longer a bank in existence in Iceland, but then we knew that. They kind of burnt all the money from England and the Netherlands, but that's another story. But they're all just becoming online PFM suppliers. That's what they're about. But the bank of tomorrow is actually going to be even more radically transformed than that. In that when we think about the 2001 and before, let's go before this. Let's go back to 1991, when the internet wasn't even here. We all dealt with a non-interactive, one-way communication system to the customer, the consumer in the home, through the television. And everyone would gather and watch maybe 3 or 4 limited channels through that one-dimensional screen where there was no interaction. And what transformed massively was when we introduced the internet and interactivity started to occur. A two-way dialogue with the customer, a networked effect. And networking and the networked effect is critical to the way in which we're seeing things transform today. It's the reason why Facebook has 750 million people, although a few are switching off these days due to privacy or switching to Google+. But that networking effect means that as soon as I invite you, it's why PayPal worked. As soon as I invite you and say, you've got money, you click, you've joined. You've squared the ability for me to communicate with you and to interact with you two-way. But now we have everything in our pocket or our purse. So it's actually far more ubiquitous than ever before. Because before we had to sit at a screen. Now we just carry this on our person. And soon it'll be in a chip inside everything. Not just in our pocket and our purse, but in our car, in our walls, in our fridges, in our freezers, in our beds. Interesting. This really does change the way we think. It's a revolutionary way of thinking because the revolution means that everyone on this planet who historically were disconnected are now connected. 6 billion people wirelessly communicating. And if you don't think it's 6 billion, look at how many mobile phones are out there today. Look at what's happening in Africa. You probably know the stories about M-Pesa in Africa. If you don't, it's a classic case study. Started in September 2007 with a prediction of 500,000 users in a year. They got 2 million. What does it do? It's a simple text messaging service to transfer money electronically. It doesn't actually transfer the money, it just sends a message via a SMS text message between an agent and another M-Pesa agent. But the difference is that before, to move money, people in Kenya had to physically get the money taken by a bus driver or taxi from the town to the village. Now all that happens is a text message says, this money is being transferred. The revolution involved in that simple change is that there's now a wireless infrastructure across Kenya and the continent of Africa that wasn't there before. It's the reason why Kenya's GDP is now being moved for a fifth of all transactions by mobile text messages. 20% of Kenya's GDP is through M-Pesa. 4 years ago, none of it was. The people who run M-Pesa are a mobile telephone company called Safaricom, owned by Vodafone. It's the biggest bank in Kenya. It wasn't even a bank in 2007. That's transformational, that's revolutionary. It's revolutionary that every single point of sale is now on a phone. It's not just a payment device, an SMS text messaging payments device. It's a point of sale. Everyone on the planet can take money and build commerce just by having a mobile phone. And you can move money simply just by bumping telephones together. That's a transformation. The limitations are now endless, ubiquitous, infinite. Because before it had to be visiting a terminal of a merchant. Now I can just visit my mate in his garage and buy stuff. That's revolutionary. And it's revolutionary because we can do all sorts of revolutionary things with phones. From account openings that just involve taking a picture of a driving license with no human hand involved in reading that information, to using the phone as a biometric secure device This is a live iris recognition iPhone app that Bank Inter uses in Spain for their high net worth wealth management broker dealings, where you hold the phone over your eyeball and it checks whether it's your eyeball and then says, yeah, you can start to deal online on your phone. Far more secure than anything we've had before. Who says mobiles aren't secure? So when we look at this stuff, the relationship has completely changed. And the landscape has completely changed of how we think about finance. In 10 years, we've seen a revolution. Not just through mobile, but through what used to be very controlled. When we had that old TV screen and one-way communication, everything was central and controlled. Then it became interactive, and therefore it became two-way, it became more decentralized, client-server. Now it's completely disruptive. It's completely different. When you have everybody connected wirelessly in their purse and their pocket, it means that everything is shared in real time, globally, through 6 billion people who are connected wirelessly. What does that mean? It means that we can see the death of a poor girl in Tehran, in Iran, live on YouTube. It may be that the government wants to keep that secret. They can't. Nothing is secret. It means that you can find revolutions taking place not just through technology, but in real world, such as in Tunisia, when a market stall holder decided to post his last Facebook message to his mother saying, I can't take this anymore, and then set fire to himself. It brought down the president of Tunisia. We've seen similar changes across the Middle East. We actually know that we can watch the death or the killing of Osama bin Laden in real time, even though his Twitter account obviously failed. They got him. And when they got him, there was a guy in Pakistan twittering, I don't like the fact there's a helicopter ahead. We don't get many of those around here. Why is it here? I don't like it. He was actually twittering and tweeting about the attack on Osama bin Laden's lair. In real time. Everything is in real time. Everything is shared. Everything is disrupted. Everything is different. Service is different. Service is transformed. We've gone from a service relationship that was human to one that is now self-service. I don't expect people to do things for me anymore. I don't expect to have a PA. I don't expect to have a typing pool. I don't expect to have a chauffeur. Yeah, I mean, I might have those things if I'm not bothered, if I'm rich enough to afford them. But most of us would just think, I want instant gratification. I want to do it myself. I expect to have things done for me by technology, not by human beings. I expect things to be automated. I expect to do a self-check-in on the airline and choose my seat, not have you just give me a seat that you choose to give me. The relationship's completely different. And we've gone from transaction servicing to self-servicing to satisfaction servicing to experience servicing. We're talking about the experiential economy. I actually think it goes way beyond that. It's the instant gratification economy. It's having everything in real time now, done by me, for myself, without any of the organisation, the politics, the government, the banks screwing it up for me. That's how the relationship's different. It's radically different. It's disruptively different. It's a revolution. Privacy is different. We can't keep things secret anymore, as most politicians and banks and others know. A good example recently was, I think there's a German politician here who complained about the fact that Deutsche Telekom was keeping all of their location records. And their location was being tracked around their political lobbying for 6 months. There's a video of it online if you haven't seen it. You can actually watch where they go every day. Nothing's secret. Silvio Berlusconi knows this, but let's not get into bunga parties. Mark Zuckerberg knows it, founder of Facebook. Facebook changed their privacy settings one day, and suddenly every private photograph of Mark Zuckerberg's life was available in public domain. It was only in public domain for 24 hours, but it's long enough for TechCrunch and Mashable to get the pictures of him partying. Now they're online for everyone to see. Just put in Mark Zuckerberg's private photos. You can see the whole lot. This is him and his girlfriend at a drinking party. This guy is even more stupid. This guy is actually the head of cybersecurity for one of the largest cybersecurity firms in America called HB Gary. His name is Aaron Barr. Now his story is really interesting because Aaron Barr believed that he can crack any organization that's trying to hack or disrupt online services for banks or governments in America. He was the head of cybersecurity for the US Navy until in 2010 he was hired by H.B. Gary, America's largest security company online, to work for them heading up their Federal Reserve Division. Now, he was hired, as were H.B. Gary, because Julian Assange caused a few problems for America. You probably know what he did, WikiLeaks, all that stuff. But when the issues really hit the fan was when he accused Visa, MasterCard, and PayPal of being instruments of foreign policy for the US government. And so they were attacked by a group called Anonymous. We don't know who they are, that's why they're called Anonymous. And Anonymous is just a hashtag on Twitter and a link that you can find for distributed denial of service attacks. So effectively, they tried to shut down MasterCard, Visa, and PayPal through distributed denial of service attacks, DDoS. And it's ever so simple. If you followed the hashtag Anonymous, you could click a link and you could be part of the DDoS attack. I love doing that, just for the experiment. But I'm disruptive too. Now, Bank of America were quite worried about all this because when all this happened, Julian Assange claimed that he had a huge amount of internal emails and documentation from Bank of America about them illegally committing foreclosures on subprime mortgage claims in America, and therefore being against the interests of customers and the US government and society of the US of America. So they hired H.B. Gary to see what Julian Assange and WikiLeaks had got. And H.B. Gary gave Aaron Barr the job of finding out what they'd got. And he worked on the case for a couple of months using social engineering online to track who were the likely instigators of the hashtag Anonymous, based upon their online and offline movements and presence in different chat rooms and forums. And he thought he had the answer on February the 4th, because he was going to present at the Black Hat Security Conference in America on February the 14th, and had an interview with the Financial Times this year on February the 4th saying, I know who Anonymous are. I'm going to present their names on the 14th of February. Anonymous didn't like that. So on February the 5th, they decided to get Aaron Barr. And they found a little chink in the firewall of H.B. Gary's security. Only a very small one, but enough to get his LinkedIn username and password. Once they had that, they could get into the online Google Cloud service for H.B. Gary, because the stupid idiot used the same username and password. Guess what? They pawned him, as is the word that's used online. They literally pulled his trousers down and exposed everything of H.B. Gary online. They got about 60 gigabytes worth of stuff. It included all the security details for Johnson & Johnson, Sony, Coca-Cola, and various clients of H.B. Gary. And they published the whole lot, made it public. How embarrassing. Aaron Barr is no longer working for H.B. Gary, and H.B. Gary kind of doesn't exist really anymore. Not surprising. The leading cybersecurity company in America, used by the Federal Reserve and the government of America, disappears overnight. Nothing secret. So let's get it down to banking and money and payments. What does it all mean? What does it mean for what we do? Well, most banks still are literally wielded to the branch. They believe the branch is still the manna from heaven. I think they're smoking dope, but that's another story. Branches are dead. I was in Iceland. Guess how many branches have closed down in the past 3 years? 30%. Guess how many are closing this year? 30%. 60% of bank branches disappearing in Iceland. Now you may say it's because Iceland's Iceland, yeah, whatever. How about Danske Bank in Denmark, who I heard yesterday have closed down 11% of their branches in the last 18 months thanks to their online presence and their digital servicing. Bank branches are going to go. They're not going to go completely. A little bit like cash will never go completely. We'll never have a cashless society. A cashless society is, again, not going to happen. We'll have a cashless society, as in less cash. But in almost every economy that's tried to get rid of cash, they've still got 4% of transactions, not of value rather, not transactions in cash. Transactions about 30%. Mainly because cash is an instant value exchange, and it's anonymous. There's not really a good alternative to that right now. But the branch, it's just stupid. It's a high cost, high overhead that's not needed anymore, particularly when we've gone into remote service and self-service. But we've gone further than remote service and self-service, and this is where banks are going to wake up very soon, to what I would call augmented service. I want a bank, rather than at the point of interaction to be working with me, to be proactively augmenting my financial lifestyle with information, so that I am proactively knowing what's going on in my balances and alerts and budgets, and equally proactively telling me things that they can do for me. So as I walk out of the casino losing all my money, give me a loan. Well, no, maybe not. But augment my life in real time with news, alerts, advice, knowledge, support, help. And do it through a dashboard of metrics I set with you as a bank through my PFM, and enable me in real time as I'm walking around the street to know that I can get good deals. If I walk into this store now, I buy, let's say, beer every week, they'll give me a deal now through the bank offer that's partnering with the bank to make that offer. That's what I want. That's what I'll get very soon. Augmented relationships, not just direct human relationships and transaction relationships. And this is all about data and data leverage. We talk about data a lot. We've talked about data a lot for many years. But data still is an underutilized material in most financial institutions. They don't get the data they've got and don't know how to leverage that data. Data used to be very centralized. It still is for some banks. It amazed me to hear Danske Bank, like Santander, saying that their strategy is to have everything on one central platform for all of their operations in all countries. You don't distribute things. Everything has to be centralized on one platform because it makes it easy for security management, change management, you name it management. I kind of don't agree. It's really constraining. There's no right or wrong model, but the decentralized model, for example, is also wrong because it screws things up too much. Too much is downloaded. It's not controlled. It's not changed easily. We've had that debate for many years, except that the debate now is it's not central, it's not decentral, it's just everywhere. Everything is everywhere. My apps are in my pocket and my purse. They hold data. It's everywhere. You may centralize the app download, but I downloaded it, so now it's everywhere. Data is everywhere. Data is completely uncontrollable. It's in real time. It's not just Teradata, though. I worked for a company called NCR in 1997 that owned a business called Teradata. Teradata still exists. Teradata was all about data mining for large organizations, banks, financial institutions, airlines, retailers, Walmart. Walmart in 1997 were very proud that they could mine 27 terabytes of customer transaction data in hours. That's no good anymore. I take a terabyte of backup storage data of my personal stuff in my pocket. I've got it in my bag. It's a terabyte data storage device for a backup of all my stuff from my main computer at home, which I just carry everywhere with me. It's a terabyte. So now, we're not talking terabytes, we're talking about big data. How big? Huge. Exabytes, petabytes, you name it bytes. And when I say real time, I don't mean in seconds, I don't mean in microseconds, I mean in nanoseconds. You look at high frequency trading in the investment markets. I was speaking to one of the guys the other day in one of the clearing houses, and he said that a transaction can now be exchanged through all the exchanges of the world in a worldwide circuit in about 400 microseconds. A global transaction circuit for a trade on exchanges. That's the speed we're going to have for everything. That's what we mean by real time. So it's nano-exa, or nano-peta, or nano whatever you want to call it, but it's data that needs to be organized and managed. And no one can manage that internally anymore, which is why cloud is so important, as you had on your slide, Dirk. Cloud is incredibly important if we're going to start to leverage data at the point of life, which is where people want it. So data's changed completely. And finally, final point, which links in with a lot of the stuff that one of our sponsors here, PayPal, would want to hear about, is money's changed completely as well. Money is no longer money. Money is just data. It's been data for about 30 years, but now it's actually just pure bits and bytes. Money doesn't matter. It really doesn't matter. I mean, I'm more than happy to throw away my money. It's English, so you don't need it. But I throw it away because I'd rather carry data around. This stuff doesn't matter anymore. You know, money, cash, as I said, it'll be around for a while, but it'll gradually diminish and diminish and diminish and diminish and diminish and diminish and diminish. You want to know how small it's going to get? I said 4% of transactions. Sorry, 4% of value, about 30% of transactions. In the UK, I got a figure just like, this week from the Royal Mint. It's still royal. It's owned by the government, so it's royally screwed, but it's the Royal Mint. And it's, they said to me there's 2.1 billion coins that were created in 1997. And today there's 1 billion. So it's half the number of coins in 14 years that are issued, new coins. So it's going down. It's just not going down fast enough, but it will. Because money is now virtual, money's just data, money's no longer important. Money's just stuff you play around with, like zombies. Actually, yeah, zombies. It's my favourite story about Facebook because it's one that taught me why money is no longer relevant. Money is meaningless. And basically it was because I got into this game on Facebook called Zombies. It was in 2009. And the idea is that you bite your friends and turn them into zombies. If your friend accepts your bite, they turn into a zombie. And you get 10 points. Now, working with bankers, I could immediately convert most of my friends to zombies because they already were in that state, so it was no problem. And I got about 290 points fairly rapidly from 29 friends who accepted my bites. The others just ignored me because they didn't know how to use Facebook. If they then bit some friends, I get another 3 points for every friend they bit. This is a Ponzi scheme, Bernie Madoff, eat your heart out. And eventually you'd get to the stage of, if you got a certain number of points, you would get to the next level of zombiedom. So I went from being a zombie geek to a zombie nerd to a zombie priest fairly rapidly. And then I kind of got bored with being in the game of zombies because I had real work to do, so I stopped playing. And I stopped playing for about 2-3 weeks when suddenly Guy Griffiths, one of my friends on Facebook, attacked me every day with shotguns. I was really annoyed because, like, shotguns are lethal weapons. You've got to spend 25 points to get a shotgun. And I only had like 400 points, and I'm thinking, 25 points? Jeez. And so the only way I get more points is by fighting my friends my zombie friends every day. And I could attack them as much as 10 times a day, and each time I won, I'd get another 3 points. If I lost, I'd get a point. So to get shotguns every day, 25 points, I had to beat a lot of people. And I kind of didn't want to spend the time doing that, so I found a thing called Spare Change, which is now Facebook Credits. And Spare Change allowed me to use PayPal to spend $50 to get 1,000 points in zombies, which gave me chainsaws. Chainsaws, really serious shit when it comes to this sort of stuff. I mean, you don't fight those. Shotguns, no problem. So I ripped Guy Griffiths to pieces for about 2 weeks, used up all my points, became a zombie warlord at the 7th level of zombiedom, and I was kind of kicking ass and knew that no one else could get near me, so that was that. You know, I'd won the game, but it taught me about the importance of micro money. Now, micro money is now everywhere. Little bits of data that's money, but it's data money, it's virtual money, that you can spend to have fun, such as on Farmville or Cityville in Facebook, run by a company called Zynga, that has an IPO valuation of about the same amount as LinkedIn. So if you've not heard of Zynga, this is a company the size of LinkedIn. And they've only been around a couple of years. In 2009, they didn't exist on PayPal. In 2010, they were PayPal's largest merchant worldwide by amounts and volumes and transactions because they were doing micro money exchanges. What they're doing is, if you used Farmville, which is their original game, in 2009, it was launched in June. By September, they had 60 million people playing the game. Network effect. From nothing in 3 months to 60 million. And 5% of the people playing Farmville would buy stuff because basically they didn't have enough friends to get tractors and sheep and pigs. which is the Farmville game. In this game, it's houses and offices and cars. Now, you think about the numbers, and you very rapidly start to work out how they're making money. I mean, take this game. This was launched in the beginning of this year, and in 6 weeks, got 100 million users. The numbers are staggering. Of those 100 million users, 5% are spending $5 a month. That's $25 a month. That's $300 million a year of people buying virtual nothing to have fun. It's why Facebook currently this year reckons that through Facebook credits and associated schemes, $1.5 billion of real money is going through in virtual crap. Just virtual gaming, virtual fun. Now, that may sound interesting, but it starts to become incredibly disruptive because in China they discovered the QQ coin, which is effectively a Facebook credit, but it's been around a lot longer, was uncontrollable. In the case of China, the QQ coin was enabling digital exchange of ringtones and blinging your profile on your mobile and your homepage, but very rapidly became the de facto coin for online exchange, and as a result was being used for gambling and pornography. Chinese government didn't like it. Tough. As soon as Chinese government, who you think can control these things, said, stop that, the usage of the QQ coin doubled. So now they work with Tencent, who run the QQ coin system, and they collaborate together, so much so that I recently saw in China someone robbed a local store, and the police were offering 1,000 QQ coins as a reward. Digital money, virtual nothing. It's my favourite story is actually the Second Life story. I mentioned it with Deutsche Bank. How many of you remember Second Life? Yeah, only a couple of you. The basic idea is if you don't like your real life, get another one. Yeah. Build your virtual life. This is actually 2 real people who got married in Second Life. Their names are Amy and David. This is them in real life. They're British, by the way, in case you're wondering. Their story is quite interesting because they found each other through online chat rooms. They got together and they married in Second Life at the same time as marrying in real life until one day he went off with Laura Sky, this is her, and she divorced him. So they married and divorced in virtual everything and real everything. I don't know. Anyway, the real point of the story is Second Life was an unusual world where you could get away from your real life, have another life. And it hit the headlines actually because of Germany. It was a German lady of Chinese descent called Ansh Chung who actually created the headlines for Second Life because she made $1 million real by selling property in this virtual world. What she did is she created virtual condominiums and apartments on the main street of Second Life that she built. And she was a very early adopter and user. And as people came in, they wanted to get those properties, so they would buy them from her using Linden dollars. Now, Linden dollars are virtual dollars in Second Life. 1 real US dollar equals 275 Linden dollars. So if she sold a condominium apartment for 275,000 Linden dollars, she gets 1,000 real US dollars. She became a millionaire by selling virtual houses. But this is a very popular game at the time. Now, one of the main stories in this game, and it's the main story that's worth knowing today, because it's incredibly relevant to what's happening today in virtual worlds, is the way the banking system run in Second Life. Because she had a bank account with, let's say, Ginkgo Bank. And Chung didn't, but she could have done. And Ginkgo Bank was one of the biggest banks in Second Life. This is 2006, 2007, when all this stuff was taking off. Ginkgo Bank would hold the account holders' deposits. They had about $1.5 million US dollars on deposit, which is worth about 300 million Linden dollars in the virtual world to buy virtual houses and virtual Gucci handbags and Prada jeans or whatever it is you want. And George Bush, George W. Bush, decided to outlaw online gambling. So as a result, all sorts of casino online operations disappeared overnight. They went to Cuba and still offered online gambling for Americans, but not on US soil, so that's okay. But Linden Labs, who run Second Life, thought we ought to outlaw gambling online or gambling in our world, because we're a virtual world online and we could get caught by the law. So they banned gambling in summer 2008, and it caused a problem because Ginkgo Bank, which is one of the main banks in Second Life, got a run on the bank, and it suddenly disappeared. The reason being is that Ginkgo Bank was being run by a 32-year-old man in Sao Paulo, Brazil, from his apartment. And he had spent about $750,000 on a Ferrari and a nice condominium in Sao Paulo. And when the online gambling was outlawed, there was a run on the bank, and everyone wanted their deposits back, and he's thinking, delete. And he disappeared, as did all the $1.5 million of real money that was on account. Now, people weren't very happy about that who used Second Life, whether it's for gambling or not, because that was real money that just disappeared. And Linden Labs said, it's not our problem. We're just here to create a game. You're having fun. Maybe not as much fun as you had before, but you should be having fun. And people didn't like that, so they started actually demonstrating against Linden Labs. Virtually demonstrating, obviously. Until eventually, after 2 months of not being able to open their offices in their virtual world or their own world, they said, okay, well, to run a bank in Second Life, you have to be a bank in real life. And you have to have a banking license in real life. Because to do money, you need to have compliance, regulation, audit, all the stuff I said at the start, the boring stuff. To have fun, you build the layers on top. It's quite interesting if you think about PayPal, and you think about Facebook credits, it's all just layers on top of the old crap that's underneath. All the plumbing and the pipes and all the stuff underneath is all the same. But to have fun and make it convenient, we just build stuff on top that makes it more easy and convenient and better to have fun. Now, one of the things that's happening, I think, which would be really interesting, is to find out whether you could run virtual currencies online without a bank, which is what Bitcoin is trying to do. Bitcoin is a brand new coin that's actually limited in amount, has no central issuing authority, has no charges for usage, and is designed by developers to be an online currency that can be used by anybody to pay for anything in an infinitely divisible form. So you can trade 0.00001 cents of a Bitcoin if you wanted to. And that value will be equated to an online exchange. So right now, a Bitcoin is worth, well, last time I looked, it was about $10. It may have changed. It was $30 about 2 months ago. It was about $1 4 months ago. It goes up and down, depending on how excited people are about Bitcoins. But the point is that money is now completely irrelevant because money is just data. And if banks don't get data, which a lot of them don't, and don't leverage data, which a lot of them don't, and don't give data at the point of life, which a lot of them don't, others do. The people you picked on, Dirk, in your slides. These guys get data. They get data really well. So much so that I buy all sorts of stuff I wouldn't normally buy on Amazon because they recommend it to me. And same on iTunes. iTunes has 200 million active account holders with their credit cards in iTunes. Double the number on PayPal. So when I look at a bank and I think about all that crap they've got from the old days of branches, call centers, documents administration, AML, KYC, regulation compliance, pipes, plumbing, infrastructure, legacy. And they say to innovate, we'll just add stuff on top. I wonder. And the reason I wonder is that the best banks that have appeared in the past 2 decades are all brand new greenfield banks that leverage the new capability rather than live with the old. It's the ING Directs of this world, not the INGs. So banks will become hybrid managers of value between the data that's valuable and the money that's underlying. And that will be the biggest change. And if they can get to manage that old legacy and to get rid of it gradually and transform it gradually into what it should be today, then they'll survive. If they don't, then they'll just be taken over by those who do it really well. So when I talk about the bank of tomorrow, I guess in summary, I think about the bank of tomorrow is the one that gives me everything I need in a remote self-service experience through technologies where my relationship is with the technology and what that technology gives me in helping me to manage my life, my money, my finances, my budgets, my life, at my point of life, not at their point of interaction. And when I think about that, I actually think that's the bank of today. Food for thought, hopefully. And sorry about my English being the way it is. Hopefully you got most of the message, and that's it. If there's any questions.